Hello and welcome to this session. This is Farhad, in which we will discuss preparation engagement. So what is a preparation engagement? What's the goal of a preparation engagement? Well, in a preparation engagement, we are contracted to create financial statement that will comply with a specified financial reporting framework such as GAAP, Generally Accepted Accounting Principle, or IFRS, International Financial Reporting Standard. Now in the US, we'll be talking about GAAP. So basically, you want to prepare the financial statements according to GAAP. So what is special about this? So why do we call it preparation? Well, because I'm going to use the word prepare, when we prepare financial statements, it all depends what are we discussing. In other words, what type of assurance are we giving in this financial statement, delivering with the financial statements. Now we will see later that we can compile financial statement, we can review financial statement, and we can audit. So we can compile, review, or audit. So where does preparation comes? The preparation comes at the bottom. Bottom means we prepare. I'm just going to put it in a different color to tell you the preparation is the lowest type of service that we can provide. When engaged in the preparation, accountant must still adhere to standards set by the Statements on Standard for Accounting and Review Services, SSARS, but they don't give any assurance. It's not an attestation service. There's even no report. We don't issue a report for a preparation. It's one of the lowest type of services we can give. And this is what a preparation engagement is. Simply put, taking the numbers from the client and put it in a accounting format. That's about it. So a preparation is not an attestation service by any means. So you are not providing an attest service. You are not providing any sort of assurance. It's not an attest service, which means it does not require the accountant to assess their independence from the entity. What does that mean? It means independent is not required. It's not an issue. So whether you are independent or not independent from the client, you can prepare the financial statements. When we mean by prepare, engage in a preparation engagement. And this is what we will discuss in this session, starting to define what's a preparation. It's very important to define what's not a preparation, because as I just told you, preparation is basically putting the numbers together, but we can put the numbers together for various reasons. So first, let's go ahead and kind of rule out what preparation is not. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhadlectures.com.
Hello, my name is Farhad. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhadlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
What is not a preparation? Well, as I mentioned, audit, review, or compilation. And guess what? We're going to cover compilation separately, review engagement separately, and we're going to cover audit a lot. Compilation, we might have 2 to 3 recordings, review maybe 10 different recordings. Those are different than preparation. Obviously, audit, hundreds of recordings, right? So if an accountant is also tasked with performing an audit, review, or compilation, it's a different standard. A preparation is none of those. Those engagement would require more extensive procedures than a simple preparation of the financial statement. So the preparation is the lowest of the low type of services we can provide. Also, a preparation is not tax submission. So if the financial statements are being prepared for the purpose of the tax authority, to submit them to the tax authority, SARS don't apply. What would apply is the IRS. Internal Revenue Service Code. These financial statements are focused on tax compliance rather than general purpose financial reporting. So it's not used for tax submission. It's not personal financial plans. If the financial statements are being prepared as part as personal financial plan, SARS don't apply. Therefore, it's not preparation. These statements are typically tailored to an individual financial situation. Also, what's not preparation is litigation services. If the financial statements are prepared in conjunction with a lawsuit, where legal and regulatory proceedings are involved, SARS are not involved, depending on what the lawsuit is. These statements are often used as evidence in legal matter rather than general reporting. They're being used for other purpose than general reporting. Business valuation services. So if the financial statements are being prepared as part of a valuation engagement, valuation means to assign a value, to assign a price to the company. Well, guess what? If the financial statements are being prepared, SARS don't apply. They have their own standard. Business valuation, they follow different type of standard. They follow different type of financial statement and analysis. So now we know what a preparation is and what a preparation is not. Preparation is simply taking the numbers from the accountant and put it in a good accounting form. Sales minus cost of goods sold equal to gross profit, deducting the expenses, operating and administrative, so on and so forth. That's all what you're doing, taking their numbers and putting those numbers in a good accounting form without giving any type of assurance. Simple, very simple work. Now, you might be saying why would a company would need to do that? Maybe small businesses, they will need to have their financial statement prepared. They have a bookkeeper, and all what the bookkeeper does is just keep track of the transaction. Now, the owner wants to see financial statement, or the bank asks them for a financial statement. That's all what they're asking for. They don't want any review with it. Just give us a financial statement to renew your loan or to take out a loan. So that's why they would ask for it. Now, how do you start the engagement? Well, we're going to see. Every time you start any sort of an engagement, what you need to do, you need to have a good understanding, a clear understanding between the accountant and the client. So before you start an engagement, which is in this situation preparation engagement, we're going to see later it's going to be a compilation. We're going to see later it's going to be a review engagement, and obviously we will have an audit engagement. In any engagement, the first thing you want to do is what? You guessed it. Have a clear understanding between you and the client. And what do we call this? Is you have to get an engagement letter. So before proceeding with the preparation engagement, we must establish clear understanding, specifically with management or with those charged with governance of the company, and often both. The understanding should be documented in a formal engagement letter. Put it down in writing to ensure both parties are aligned on expectation and responsibilities. Why? Because you know what's expected of us. We need to know what's expected of you. In case anything goes wrong down the road, we delivered, you delivered, whatever. If we go to court, we have clear understanding. So the understanding with management should cover the following key points. And obviously, kind of think about it. First thing we need to know is, what are we doing for you? So we have to spell out the objective of the engagement. The engagement letter should outline the purpose. Why are we engaging with you? Which is for the preparation of the financial statement. This sets a clear expectation for both the accountant and the management, or those who are in charge of the company, about the goals of the engagement. So we're not doing a review, we're not doing a compilation, we're not doing an audit. We are preparing the financial statement. Now then we have to tell you, as a management, what's your responsibility? Accuracy and completeness of the financial statement, because you will be providing us this information. This includes providing us means providing to the accountant all the necessary information to make sure the statement comply with the financial reporting framework. We need the numbers, we need the figures. We also have to have an assurance disclaimer. The engagement letter should specify that the accountant is providing No assurance is not providing any assurance. Remember, we don't need to be independent. We don't need to provide any assurance. This means that the accountant will not be guaranteeing the accuracy or reliability of the statements. No assurance whatsoever. If this disclaimer is not explicitly included on each page, the accountant would be required to issue a formal disclaimer indicating that no assurance is provided. What do I mean by this? So when we prepare a compilation, let's assume it's several pages. On each page, you'll put down no. We're going to see exactly what the statement is. You would put down on each page no assurance. Now, if you cannot put no assurance, it doesn't fit or whatever, you issue a report claiming that you are providing no assurance. So on each page of the financial statement, you will be required to issue a formal disclaimer indicating that no assurance is provided. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following statement correct regarding preparation engagement? A CPA is not required to be independent. So is this a correct statement? If we say the CPA is required, no, they're not required. Therefore, I would say this is correct because in a preparation, remember, no assurance is given. And because no assurance is given, the users, they don't expect you to be independent. You're not giving them any sort of assurance. Therefore, if you're not independent, who cares? You're not independent. So A looks good. The CPA provide limited assurance. No assurance in a preparation. Matter of fact, you're going to see later, just planting the seed, limited assurance is for a review. We call it limited or we call it negative since we are at it. B is out. The CPA responsibilities are similar to those performed during a review. No, they're not similar. In a review, you're going to see later, we have to ask questions, inquiries, and we have to conduct analytical procedures. The CPA must issue a preparation service engagement report. No report. No report, no assurance, and no report. Basically, it's the most basic service you can provide. Just taking the numbers, put the numbers together, maybe add some notes to clarify things, and that's it. No report whatsoever. What should you do now? You want to go to Farhat Lectures, look at additional resources, multiple choice, additional lectures. That's going to help you whether you are an accounting student taking an audit course or CPA exam. Invest in yourself. Good luck, and of course, stay safe.